Good morning, good afternoon, good evening, wherever you are in the world. I'm Nicolas Véron at the Peterson Institute. It's my pleasure to introduce this new session of the Financial Statement series. And today we will discuss Germany and German banking and politics, because in Germany, banking and politics come together. Martin Hellwig will present. He's a towering figure in the German financial services debate. Director, now Emeritus of the Max Planck Institute for Research in Collective Goods in Bonn. He studied economics at the University of Marburg and University of Heidelberg, got his PhD in the US at the Massachusetts Institute of Technology in 1973. Then Martin Hellwig taught at Stanford, at Princeton in the 1970s, then at the University of Bonn, University of Basel, University of Mannheim, visiting positions at Université Catholique de Louvain in Belgium, London School of Economics, Hebrew University in Jerusalem, and Harvard University back here in the States. Martin Hellwig joined the Max Planck Institute for Research in Collective Goods in 2004 as its director. He has left a very strong mark on that important German institution. Before that, in the early 2000s, he was the head of the Monopol Commission, the Monopoly Commission, which is a forceful advisory commission to the German government in matters of competition policy and anti-monopoly action. He has also held, I should say, countless advisory positions in a number of bodies I will mention, with the European Commission, with the European Systemic Risk Board, where he was chairman of the advisory scientific committee, and in different capacities with the German government, including in the advisory committee of the academic advisory committee of the German Ministry of Economic Affairs. He also co-authored with Anna Tadmati an influential book on bank capital requirements. Katharina Gnath is at the Bertelsmann Stiftung, the Bertelsmann Foundation, where she's in charge of the foundation's work on the European economy. She studied at Oxford, at the London School of Economics, where she got her master's in European politics, and a PhD later on at the Berlin Graduate School for Transnational Studies, which is a joint graduate program of several Berlin-based institutions, including the Hertie School, where she later taught. She has also worked at the European Central Bank, at the Stiftung Neue Verantwortung, before that at the German Council of Foreign Relations, also known by its German acronym, the DGAP. She has had visiting positions at the Federal Trust in the UK, at Yale, and she joined the Bertelsmann Stiftung in 2015. So we'll discuss, as I said, the current context created by, of course, the outcome of the German election and the ongoing coalition negotiations, but that comes with a lot of background and history. And on that, Martin, over to you.
Okay, does this work?
Yes.
So, banks and bank supervision in Germany, problems and perspectives. It's very simple. The banking system has a flawed structure, excess capacity, and barriers to exit. The politics are dominated by parafiscal funding objectives, promotion of champions, and protection of special interests. Supervision has a record of being extremely passive, subordinated to the finance ministry, dominated by legalistic thinking, a lack of professional competence, and hampered by unclear divisions of responsibilities. When you take all of that together, it's no wonder the German fiscal costs of the financial crisis were on the order of 70 to 80 billion. Banking system structure, and that's actually important for our discussion. There is a separation between public, cooperative, and private pillars. Public is again split into local and regional global, the Landesbanken. Cooperative has a similar separation. Private involves mainly the great banks and then lots of specialized institutions. With the exit of Dresdner through the merger in 2008 with Commerzbank, great banks are reduced to Deutsche Commerzbank and UniCredit, the former Hypovereinsbank. Business models: local, public, and cooperative are in the retail business, and that's still profitable. The great banks traditionally had a business model of taking retail deposits plus money market funding to lend to larger firms. That was profitable until the mid-90s and has not been profitable since then. The Landesbanken never were profitable. They take deposits from local savings banks plus the money market, lend to larger firms, international project finance, and their main function is to be available for the head of the regional government to make available a few millions without any call to a parliamentary committee. I'll not so much talk about the further history. Basically, between 95 and 2005, many things just changed and disappeared, and nobody knew what to do about it. And lots of poor strategies contributed to their being affected in the crisis. The supervisor has a strategy of being in cooperation with banks. No information is let out because that might harm cooperation. That's a quote from their statement in a constitutional court lawsuit. They did not interfere with the creation of structured investment vehicles and conduits, treated the SIVs as if they were independent firms. No interference with crazy acquisitions. Are afraid to interfere anywhere because of legalisms. In the cases of Cum-Ex and Wirecard, they were completely passive. We had some exits, the most important one imposed by the European Commission, and we had lots of bailouts. Is there scope for reforming structure? The answer is no. The heads of the regional governments, the governments of the Länder, think that the ability to move a few million by just a phone call without asking anybody is worth every euro of taxpayer money. And these guys are important in the political process at the federal level because they form the second chamber. So from the perspective of the Bund, that's the concern about the impact of the Landesbanken is of a second order of magnitude. If you think about the actual players, Mr. Scholz was in charge of what happened to HSH Notbank. He was also in charge of not going after Warburg in the Cum-Ex affair. And he was in charge of a BaFin that did nothing about Wirecard. So maybe his moving from the finance ministry to the chancellery gives room for more activism at the finance industry. But one may have questions about this. The European Commission was the only player who was really active, but has also become more passive recently. At BaFin, they do not have clearly specified objectives. Consumer protection is not given much weight. They do not have much understanding of systemic risk and basically still go by the rule that if every bank seems to be going by the rules, everything is fine and nothing is going to happen. We need reforms, among feasible reforms, perhaps feasible reforms. We need reforms of governance that includes removing the banks from the administration council of BaFin. By the way, I didn't explain, BaFin is the German supervisor. Reduce the dependence from the finance minister. Legally, the finance minister is in charge of everything that BaFin does. And that's not just legal control, I mean control on whether things are legally correct, but also material control. Perhaps, and I think that would be a good idea, distinguish between treatment of cases and treatment of general directives. Continue to allow the finance ministry the latter with the procedure to make this public, but make them independent in individual cases. That's the model we have for the cartel office and the regulatory authority. And while there are open questions, on the whole, it seems to work. At the level of operating procedures, we need significantly larger penalties, as in competition policy. We need to strengthen the protection of whistleblowers and the like. We need to introduce more credible analysis, economics, and a system focus into what they are looking at, and reduce the legalism. On that, there is an issue that if push comes to shove and a bank sues, the administrative courts are probably even more conservative than BaFin on those questions. We also need to improve the quality of personnel, providing them with more attractive career patterns, more training, and create a sense of ownership of supervision as an independent activity. This sense of ownership is what makes for the strength of the Federal Cartel Office. In BaFin, it's completely missing. That's all very modest, but even that is not something that will come into being by itself. We also need to eliminate the thicket of competing competences, of federal and lender competences in the issue of money laundering. That was an issue in Wirecard. And the separation of activities between the Bundesbank and BaFin make the bank supervisors, the people who do the actual job, more clearly accountable to BaFin rather than the Bundesbank. To summarize, a major reform is infeasible. Significant improvements might still be attained if the political will can be created, but some of the people in charge have a record which doesn't bode too well. That's it. You need to unmute yourself.
Sorry, after a year and a half, I still don't know how this thing works. This was incredibly impressive, comprehensive, and sobering. Thank you, Martin, and over to you, Katharina.
Thank you, Nicolas, and thank you for the invitation. I was told before the session started in public that I might or should be the person or the reason of hope. I don't know whether I can give that, but thank you, first of all, for this comprehensive overview and also this very clear reform agenda, which sort of covers several areas, both on structure of the financial sector in Germany, but also on the supervisory architecture. And you highlighted very well how much this is entangled with politics. So I took Nicolas' question again, whether the new government can change something, and sort of put it a little bit on its head. I will say something about it in the end, but sort of looked again of where does change can come from. We heard it's incredibly difficult, but there are sort of several ways how we could see some change. How likely it is, you can judge. The first one is external pressure by the industry changing and by competition pressures sort of putting more pressure on the existing system. It has been very, let's say, resilient, if you want, because it had a lot of political backing, but there is the possibility of further restructuring. And there's also the possibility, and that's also a second way of how change can come about, of further scandals. The most recent one that has created a lot of public discussion and media discussion was Wirecard. So the media has really been on this case, and I think that's also always a place where change can come from. it's not a systematic change, it's not a reform, but it's sort of a pressure on the system, where the system can sort of show its weaknesses and then maybe break, and you need to have some reforms, as we've seen with the Wirecard case and some ensuing small steps, but there have been reforms of BaFin and a change of head. So that's the sort of the first avenue that we can imagine. That's very difficult to plan and difficult to forecast, but that's definitely still there. The second one is the international, is the relation to the European banking union and the sort of single market for financial services. And so the idea that you get some international pressure through this sort of international financial stability community, most likely through EU and possible changes of directives when it comes to safeguarding the integrity of the financial system at the European level, that might have repercussions for national supervisory architectures. I'm not putting all my hopes in this basket, but this is definitely a regulatory development that can have implications for the national, sort of a Europeanized way of looking at the national supervisor in completion of banking union or capital market union, or the adopting or adjustment of the single rule book. That's sort of the second way. The most interesting, and that is probably the one that you're also most interested in, is the domestic political change in Germany. We have seen with Wirecard, also cum-ex, there was an inquiry committee in the last parliament, but in this most recent session of parliament, there has been so for the last year, there has been an inquiry committee, an Untersuchungsausschuss on the Wirecard scandal, and not necessarily just looking at the misuse or abuse and the financial crime involved, but also uncovering in the process, particularly by the opposition, and uncovering also more systemic problems of the supervisory setup, questions of competencies, questions of capacities of the organization, questions of the relation to the finance ministry for BaFin, and the question of accountability and independence. We heard it. So there has been, if you want, a capacity building within Parliament, and at least, even if the vote was maybe not something that sort of called for huge changes, because the governing coalition still holds the majority in Parliament. We've seen in the dissenting voices, in the minority votes, we've seen a clear sort of, if you want, emancipation by Parliament to keep this topic on the table, to keep it alive, also maybe in cooperation with the media. So there is this hope for more parliamentary scrutiny and capacity building. But again, it then depends on the government in charge. And this is the big question right now. We are currently as you all know, in the phase of coalition building and negotiating and formulating the coalition treaty between the Social Democrats, the Greens, and the FDP. And there has been very little. There has been an exploratory paper that has now set the sort of proper negotiations. There has been nothing in it, or very little, and it's not super surprising. But we know, both from the parliamentary inquiry and also from the campaign programs, that particularly the Greens, maybe to a lesser extent also the Free Democrats, so the two junior coalition partners who are most likely now entering the coalition with the SPD, have been on this topic, and have also made this topic, have given the topic considerable space in their campaign program, both in terms of analysis, but also in terms of reform agenda. So the big question now really is, and you've mentioned it already, Martin Hellwig, Scholz and the SPD-led finance minister or finance ministry will now move to the chancellery. So the finance ministry is up for grabs, and it's definitely going to go to one of the smaller parties. I suspect I put my bet on, or my money on the bet, that the Greens will get it, even if it's highly contested between the two parties right now, for the mere fact that they're the second largest party in the government. And if they wanted, and they do, and they've made this clear, then there is very little reasons in terms of power politics why they shouldn't get it. And so with a Green finance minister, this will be interesting within the government, because there are a couple of people on the side of the green politicians who might also be state secretary, not just the minister, who have been working on these issues, both on the European level, but also on the German level. And I could see some sort of, this is a bone of contention also for the negotiations. So we will sort of look at the finance group, who's not negotiating the finance chapter. They have many topics on the finance chapter, obviously, but I see some sort of room for at least a stronger debate on this, because this is at the core of some of the green politicians who are now also in charge of some of the negotiations. So if this is the hope, this is all I can offer right now. But there is a chance that although the SPD has been sort of in power and has been maybe part of the problem, but at least have not been actively looking to solving some of the problems, they will have other coalition partners than the CDU, and that might make it more transparent and might make it more uncomfortable for them. But I leave it to this.
So you mentioned CumEx, that was a tax avoidance scheme aided by the banks, right? And the audience is probably familiar with Wirecard, the payments company that is associated with money laundering and a lot of other horrible things, including divulgation of the formula for Novichok, which is my favorite anecdote in the story. You mentioned, Katharina, that Wirecard was discussed widely in the German media, but to my surprise, and this shows how little I understand to German politics, it didn't appear to affect the campaign that much, because both at the chancellery level and at the finance ministry level, all the senior figures were implicated one way or another. And I mean, look who won, right? So, so isn't there a little bit of a counter argument to your point about the engagement of the public with Wirecard, that it didn't appear to feature that much in the campaign, despite the direct involvement of the senior government leaders?
Yeah, you're right. It's not a public topic that, well, it made the headline of the Bild, the biggest newspaper tabloid in Germany. But you're right, it's one of those topics that are so complex that it's not widely discussed. But the fact that within, especially the SPD, there were lots of people very worried that this might be one of the topics that would trip Olaf Scholz up, also with his involvement in the CumEx and this more tax-related issue or scandal. It did not happen, you're right. So it's not sort of a make or break topic. It wasn't a make or break topic, but my point was more that there was a greater parliamentary and sort of, it's still a small community who looks at these topics. But I think given that it is such a complex issue, it made some waves. It didn't implicate them in the end, but at least it was kept on the table.
Martin, did you expect Wirecard to feature more highly in the campaign, or were you completely not surprised?
Me?
Martin?
Oh, Martin.
Now you're muted. You're muted, Martin.
Can you please repeat the question? Because I was just answering a question on the chat.
You shouldn't be distracted by the chat because it's impossible to do everything together. My question was whether you were surprised by the fact that Wirecard wasn't that big in the campaign and didn't seem to affect the electoral fortunes of Olaf Scholz.
I was surprised that Olaf Scholz was not hit more for his shortcomings in the past. I think one reason for that was that the Christian Democrats, plus some other political forces, both inside and outside of Germany, preferred to go after Annalena Baerbock And of course, going after her was much easier for, say, discussion or just chasing in the social media, whereas to explain something like Wirecard or something like cum-ex to the general public is very difficult. So in terms of the sheer complexity of the required political discussion, it's not so surprising. And in the end, there is another effect. The attitude not only of politicians, but also of the people at large towards financial institutions is, see, these institutions are where the money is. They should give us their money, and the regulators should not prevent them from doing that.
So that leads me to a question about Brexit, right? I mean, Germany is one of the big beneficiaries as a financial center of Brexit, and the fact that a number of activities have to relocate. How do you view that going forward? I mean, how is the attitude of the German public, of the German political system, going to affect the fortunes of Frankfurt and more generally Germany as a financial center for wholesale international activities, which kind of represent a new segment of the system compared to the traditional three pillars that you presented, Martin?
This is the decades-old pipe dream of making Frankfurt an international financial center. I don't see that as being in the cards, for the simple reason that the German political system is not up to that. Amsterdam, I mean, the French have the same hope about Paris. I think their chances are bigger. But if I have to put my bets on someone, it would be Amsterdam.
So talking about BaFin, we have a question from an anonymous attendee, I don't know if that's a person from BaFin, on whether you can expand on the comment that the supervisors were extremely passive. And we also have a question from Steven Sylvia at the American University asking about Mark Branson, who replaced Felix Hufeld when Hufeld had to resign in the wake of Wirecard. So Steven says, Mark Branson has been touted as a person who can change things at BaFin because of his foreign experience, and he was previously in Switzerland. What is your assessment of his potential to make a difference? Martin.
On the first question, passive. BaFin is sitting in, either BaFin or Bundesbank or both are sitting in on all board meetings, executive or supervisory. And one of the questions that were at issue before the Constitutional Court was, how often did they raise their voice?
You mean they attend the board meetings of supervised entities, right?
Yeah.
Okay.
How often did they actually say something? And the frequent, sort of, after a 7-year lawsuit, they were forced to divulge, the government was forced to divulge this information. And even with problem banks, they didn't say anything, even as strategies were shown, were pursued that created risks. The incidence of utterances increased in 2007 and 2008, but before that it was practically nothing. On structured investment vehicles and conduits, they completely accepted the bank's assessment of risks that might be involved without questioning anything. On the shotgun merger or takeover of Hypo Alpe Adria by Bayern LB, when asked the response given by the federal government to the Greens after this lawsuit before the Constitutional Court was, BaFin didn't want to interfere because they believe in free enterprise and the autonomy of institutions such as Bayern LB to engage in mergers. This in a case where the procedures chosen, and the Austrian supervisory report or investigative report afterwards shows that, ran against all rules that have been imposed. I think these are instances enough to substantiate what I said about passivity and lack of interference. On the question of whether Mr. Branson can do anything, I have no idea. I do not know him. But I remember Mr. Cryan, who was called from Switzerland to take over the job as CEO at Deutsche Bank. And Mr. Achleitner, the head of the supervisory committee, spent a certain amount of time trying to impede the putting down of investment banking at Deutsche Bank that Mr. Cryan was trying to engage in. And in the end, he tried to look for a successor for Mr. Cryan because he thought Mr. Cryan was too active. And when he eventually dismissed Mr. Cryan, he said, Achleitner said about Cryan, oh, he didn't proceed fast enough in reforming the bank. When you get someone from the outside and put him into a position that plays a role in certain power plays of incumbents, even the best person will not necessarily win in that situation.
Katharina, you worked at the ECB. There's a question from Jacqueline Mills, sorry. To what extent does being part of the SSM, the single supervisory mechanism within the banking union, contribute to overcoming this passivity now that the BaFin has to work with the ECB for banking supervision? Any views on that?
And one thing, yes, and on the passivity, it even went further in the case of Wirecard, where they actually impeded or tried to sue the investigative journalists who brought it up and sort of made their life difficult. So in terms of using whistleblower and using the information to then uncover individual wrongdoing, they were even less than passive, if you want. That's sort of maybe adding up to the sort of questions of systemic risk assessment. That's a good question, and I think that there is definitely this cooperation that is now more structured and more needed is definitely sort of helping in terms of learning. Whether the BaFin changes in the end and changes its mandate and changes its relations it has, how far it's supervised also by the finance ministry, that is something that is also enshrined in German law and the German supervisory architecture. So the sort of broad changes that you might hope for when it comes to its relations in politics and accountability probably doesn't help alone if you're part of the SSM, but I think in terms of sort of best practices of the questions of capacity and competence, that is something where you can sort of have this ongoing socialization or learning experience or Europeanization, if you want. But it's not enough. So if you're sort of hoping to change the system via the European system, then you're probably in for the long haul, and you might make small changes to operative independence, but it's sort of always sort of coming from the side. And in the end, if you really want to change it within Germany, you have to make adjustments to the legal structure as we have it. And so there, I think it depends on whether the needs to make changes to the national supervisors will there will be a bigger pressure. But at the moment, I would say it's the learning and the best practice experience is probably not enough. And you really need to look at the German sort of legal foundation for that too. But it definitely is not bad if you...
Martin, any comments on that, on how the banking union has changed the system? And also we have a question from Alexander Privitera on whether Germany's inability to reform its banking system might impede the completion of the banking union.
That's to a question to me.
Yes.
On the SSM, it has had practical implications. Some of the recognition of losses or potential losses in loan books that took place in the comprehensive review in 2014 and later episodes came under pressure from the SSM. I believe that if it had been just a matter of BaFin, nothing would have happened. And I think it's not a coincidence that some of the problems that we're talking about are problems outside the domain of the SSM. On completion of the banking union, I don't think that's really just a German issue. I think the real issue concerns the politics of bank resolution. And as long as every member state government sees the treatment of bank resolution, including bailouts versus bail-ins, as an affair of national sovereignty, national politics, including election risks, we're not going to get a completed banking union.
I'd like to stay, we'll come back to banking union, but I'd like to stay on BaFin for a moment. You made this very important observation, and I think this is something that is not well understood outside of Germany, that at this point, the authority over BaFin is really the finance ministry. How far does that go? Does that mean that every BaFin decision has to be specifically validated by the finance ministry? That BaFin is just an advisory body? No. Or what is the mechanism?
BaFin decides, but under given constitutional principles, BaFin is subject to orders from the finance ministry. If the finance ministry wants a certain decision, they can ask BaFin to have that. There is absolutely no transparency as to the extent to which this is used. Of course, sometimes if they anticipate what the finance ministry wants, it may not even have to be used. But this is why in the suggestions that are made and that have been put in writing in a joint paper by Gerhard Schick and myself, we say we should follow the procedure in the case that we have in competition policy, namely absolutely no interference with individual decisions and transparency about general principles. Concerning general principles.
Sorry, yeah, go ahead.
Concerning general principles, my own suspicion is that the passivity of BaFin vis-a-vis structured investment vehicles and mortgage-backed securities, which, by the way, you did not have in France. The French had a different policy on these things. That this may have had to do with the fact that the finance ministry has a documented clear opinion, or had a documented clear opinion on both of these things, saying that German supervision should not meddle with German institutions participating in this wave of the future of finance. So that kind of relation should be made transparent.
So basically now, if the finance ministry sends an order to BaFin that you should do this or you shouldn't do that, this is not brought to the knowledge of the public, even if there is a letter or right. a written documentation.
Nothing is public.
That's really interesting. Katharina, do you want to comment on that?
Maybe just a short point, and this is why then, maybe not for the general public, but for those people interested in it, these inquiry committees can also be very interesting, because you do it for a certain case, and you try to sort of investigate the wrongdoing or abuse in a certain particular...
The parliamentary committees, right?
The Parliamentary Inquiry Committee. But if you do it well, and some of the parliamentarians have done it, you may use this opportunity to invite or request, subpoena the members of the finance ministry, for example, or the state secretary, and then try and sort of find out more. Whether you will get the answer in the end is another question, but at least you have a very good way of at least asking the questions.
But
and this is
another...
why these committees are sort of triggering, at least in the expert community, are sort of very well watched and sort of also broadcasted sometimes.
But and pardon my ignorance, because this is something I never fully understood, doesn't it cut both ways? Because there is also a lot of parliamentary influence over BaFin. It's not just the finance ministry, which can, so is there a risk that this parliamentary influence could also lead to the wrong kind of political interference, as opposed to the right kind, as you just described, Katharina, of providing more transparency and accountability?
Theoretically, it's possible, but I think we've seen with these inquiries that they were really looking to sort of search for the problems and search for the structures.
Martin, do you agree that the relationship between BaFin and the Bundestag is generally a good thing and healthy?
I think it's good to have someone look into these things. This is actually the first time where I've seen some effective activism on the side of the Bundestag. It has to do, but it also has to do with opposition versus government. And I've seen in other areas how the party that formerly was the opposition, all of a sudden, once they got into government, changed their attitudes. On the role of the FDP, I would also like to point out that a year ago, the FDP had brought in a resolution into the Bundestag on the completion of Basel III, called Basel IV by the banks, saying how awful this was and it was quite clear. The text of the resolution showed that the parliamentary party of the Free Democrats were up to details at just the level of competence that you would expect from a member of the industry. And the message was the same. So
this is not unknown in other countries, including some I know well. Actually, my question to this to you is this. I mean, we know that the CDU and the SPD, and you alluded to it repeatedly in the case of the SPD. I mean, many of their politicians, especially at the local level, are directly involved with the Sparkassen and the Landesbanken and have mandates and even derive personal revenue from that.
Right.
Is it the case to a similar extent for the FDP and the Greens, or are these parties, because they are minority parties, do they have fewer seats in boards of the Sparkassen that would change the relationship in terms of the political economy?
Well, they definitely do have fewer seats. It isn't also always a question of seats on the boards. If you think about the Sparkasse in a city, the question is, how does the head of that institution react if the mayor wants something, or if the deputy mayor wants something? So some of these pressures are informal. But one of the things that I've observed in discussions about public banks, there is a grand coalition between the two large parties, and the small parties sometimes have different opinions, or often have different opinions. There also is, and this now concerns the Landesbanken themselves, members of the Bundestag, even from the large parties, think the Landesbanken should be much more restrained, or perhaps even done away with, more or less regardless of party. But then they say There's no way we can do anything against the heads of the regional governments, against the Ministerpräsidenten.
Maybe adding on this, and I don't have a fixed answer on it, but what we've seen in the Bundestag with a strengthening of the traditionally smaller parties and a weakening of the traditionally the people's parties, so the dominant parties, despite the fact that the SPD has won, but they came from sort of low level, but traditionally these two parties, also at the subnational level in the Länder, but also in the communal level, have been the dominant parties. And it's a question mark for me whether the fragmentation of the party landscape that we've now seen in the Bundestag, that we now also do see at the Länder level. We have, for instance, a green finance minister in a very powerful and large land, Baden-Württemberg. So there is also a change of government composition, also let's say, a strengthening of some of the junior partners, and they've become sort of equal size. So it's worth observing at the subnational level what that will do to this relationship between politics and the financial sector and financial supervision. That's, for me, it's an open question. And you might well be right.
Take this example of Baden-Württemberg. So the Greens become finance ministers. They also have the power at the land level in terms of the highest executive position. Is the result of that they bring a fresh look and they change the relationship with the local banks, or is the result conversely that they put themselves in the shoes of the previous incumbents and they become just as aligned with the local public banks as the previous rulership used to be?
That's a big question. And the jury is out. I wouldn't be totally pessimistic that there is no chance of a stricter scrutiny, but we will have to see.
How does it differ between FDP and Greens? I mean, would you say that in terms of this relationship to the public banking system, there is a difference between the two parties, or they're both incumbent and basically subject to the same kind of incentives? Well, not both, incumbents, I mean newcomers, sorry.
No, the FDP doesn't especially like the public banks, but they like the private banks. And there are some areas, so this resolution that I was talking about was obviously inspired by concerns of the private banks, because much of it was about the floor for the internal model-based computation of capital requirements. Over the 15 years in which I've been involved in this, the Greens have been more active along lines that I would support. With the FDP, I've seen very little. They've been very active on Euro politics. And I should add, I've seen the same when I was on the Monopoly Commission, and there were questions of sector-specific regulation, both for the energy sector and for the telecommunications and postal sectors. The Greens were, in a sense, more principled, and the FDP basically was not present in those discussions. The Greens, however, were not beyond making bargains between regulatory treatment and promotion of green policy through green taxes and the like. One fear I have, which of course is not just a fear, but is a real danger at the level of the European Parliament, is that they go for compromises on regulation if that helps the promotion of green energy or other green investments, which to my mind is not very different from asking for special treatment for homeowners. mean, once we go down that route, we end up in a swamp, and they never ask the question or answer the question, what should the supervisor do if there is a conflict between green objectives and financial stability?
Well, that's also a question for the ECB at this point, I guess.
Exactly.
But that would be for another debate. There are a number of questions about the structure of the German financial industry. So Marcel Magnus is asking whether the deposit guarantee system, the Einlagensicherungsfonds, have a more active role in the system, or should play a more active role in the system, because at the end of the day, they're on the hook if something goes wrong. For example, they had to pay 2.7 billion, Marcel Magnus writes, in the case of Greensill Bank, another problem bank in Germany recently that we haven't even talked about. Bastian Yazbet asks about institutional protection schemes and national legal provisions that largely sabotage, I quote him, the European resolution regime in terms of its legality and sheer execution. And it's no secret that Bastian is a member of the Single Resolution Board, so he says that. And there's also a question about the joint action of the ECB with BaFin in terms of suggesting reforms to the institutional protection schemes and deposit insurance of the Sparkassen in letters that have been reported by the media. So also we have a question, sorry to bundle them, but because we're getting close to the hour, from Jörg Genner asking whether, basically, I mean, you're in Vienna right now, Martin, if I'm not mistaken, why is it that the German Sparkassen are escape supervision by the ECB, whereas the Austrian equivalent are within Erste Group under the ECB supervision. Maybe I misunderstood his question, but that would be one way to ask it. So basically, all this, I mean, it's very difficult for outsiders to understand the three pillars of German banking, but can you give us a little bit of comment on where you see this going, including in terms of European reform, resolution reform, and also banking supervision?
Okay, on the treatment of the Sparkassen, that was basically a matter of negotiations. The German government actually was in a strange position because at the summit in 2012, they had introduced an agreement on the SSM as a way of, so they thought, getting control over bad happenings at Spanish banks. Which was, of course, true, except then they came home and the public banking system in Germany was in uproar, because that would mean that German banks would also be subject to this kind of supervision. So then they negotiated that the local savings banks would be exempt, or would only be subject to supervision in principle, but not in practice. I mean, in principle, the ECB can interfere with supervision at any institution, which, to my mind, wasn't the worst thing, because the local savings banks have been the only part, together with the local cooperative banks, the only part of the German financial system that's really stable. Institutional protection schemes, they were introduced in the 70s after the Hallstatt collapse as a way of preempting a national deposit insurance and preempting the supervision, the extra supervision that would go with the national deposit insurance. So the Germans have always said, we do this on our own. I think that's altogether a matter of self-deception, because when push comes to shove, none of these association-based schemes are really able to foot the bill. If the German government hadn't stepped in for Commerzbank and Hypo Real Estate, Deutsche Bank would have been the only subscriber left, I mean, big subscriber that was left for funding the bailout fund, and Deutsche Bank's balance sheet didn't exactly generate much confidence then. So they really, I mean, in that crisis, the private scheme really was left off the hook by the government intervention, but that hasn't stopped the myths, which I consider to really just be a myth without much substance, of insurance through the industry itself from being perpetrated. And of course, it serves a political purpose. On substance, I think it has one positive side effect, which is that at least at the level of the savings banks and the cooperative banks, you get some control of risks taken by the individual institution from the association, so that some elements of moral hazard may be avoided. And I don't think it's a coincidence that problems have arisen with the Landesbanken rather than the Sparkassen, the local banks. And actually, if you ask who's maddest about what happened with the Landesbanken, the answer will be representatives of the Sparkassen who had to pay up and participate in losses. Is this going to survive? I have no idea. Does it matter? I don't think it matters very much, as long as the overall resolution regime is so impractical that everybody tries to avoid resolution.
Katharina, any more comments on this three-pillar system? And also, we have an even bolder question from Alessio Di Vincenzo. Wouldn't it be possible to privatize all this and resolve the problems of the incentives in public banks through a privatization process? There was also a question on prohibiting politicians from sitting on the supervisory boards of those public banks at the local level. What do you think?
I have nothing to add to the points that Martin Hellwig made, but on the question of sort of a wholesale privatization, there I think, and we talked a little bit about who the FDP likes, and when we look at the Greens and the SPD, then I think politically that is not feasible, because for many reasons, but this sort of cooperative public pillar serves a purpose in a lot of the local economy, but also I think politically would be very difficult to, for especially those two parties within the government to sort of support a wholesale privatization. So I just don't see it happening, but it is interesting to see what relations, and it's going to be interesting to see how the Greens are going to position them in this sort of three-pillar system. That is something that I will have a sort of a close eye on. But yeah, I think it is unrealistic in the given political climate.
Almost at the hour, so let me conclude with two big picture observations and maybe some final reactions from both of you. Mark Vail asks, to what extent the shift among German firms away from bank-derived industrial finance and towards equity finance, to the extent that it has occurred, weakens the political dominance of major banks in Germany. And Ted Truman wonders how German public opinion reacts to the inconsistency between being in favor of domestic bailouts and against international bailouts. So any final reactions on this? Maybe Katharina and then Martin?
Well, public opinion on these complex issues is a story in itself. I think there is sort of, the question is whether there is an understanding of who owns what. And I think if you sort of bail out something that is domestic, no matter what the sort of structure in the end of this institution is, but it's something that is well known within the, in this case, German sphere. It's easier to sort of bail it out than if it's something that is foreign, even if there is a sort of equity, a German equity, and taxpayers' money may be also involved in these international bailouts. So I think it's not a rational sort of or a fully consistent view, because there isn't actually such a big debate on these issues. But that would be sort of my hunch, and the other question I leave to Martin.
On the question of political influence, the real political influence on matters of finance is with the heads of regional governments and the savings banks. The commercial banks had political influence, in particular Deutsche, as long as there was a sense that these were national champions who were going to conquer the world. That sense has, as I see it, by and large gone. On the question, now what was the other question?
Yeah, there was this question of equity versus equity finance versus bank-based finance from Mark Vail, and Ted Truman was asking about bailouts abroad versus bailouts at home.
Okay. I believe I've answered the first one now on bailouts abroad, bailouts of sovereigns versus bailouts at home. Well, bailouts at home, that's part of our family. I mean, as Katharina was saying, bailouts abroad, much of this is really part of the general story of what EMU is about. So two hints there. One, if I say, and by the way, the full allotment rule in 2008, allowing southern banks to get as much from the ECB as they demand, was a way of allowing southern banks to repay interbank loans to German banks and indirectly helped German banks. Nobody takes that seriously, nor any of the other arguments that I might give. The other point about EMU, if you ask why is there really so much emotional resistance? Well, with EMU, we no longer can celebrate a revaluation every 3 years. That was wonderful. It allowed us to look down on the French and the Italians who were not so good. The Bundesbank was, in a sense, the successor of the German General Staff. These revaluations were almost as good as winning the championship in football, and much more reliable.
So on that nostalgic note, on which I won't comment as a Frenchman, but just because we're over time, Liberty goes here, I'm into football, of course, thank you so much, because this was absolutely fascinating, and I think we covered a lot of German ground here, including local and regional ground. I'm very grateful for this, I encourage the audience to note the next session of financial statements on November 19. We will discuss actually Eurozone enlargement, because new countries are joining the Eurozone after a long pause. We'll discuss that with Boris Vucic, the governor of the National Bank of Croatia, and Julia Kirani, who is in Hungary. Thank you so much for participating in financial statements. Sorry for having gone a little bit over time this time, but it was well worth it at the end, if only to discuss European football, also known as soccer. Thank you, Katharina Gnath. Thank you, Martin Hellwig, for a very rich exchange. And thanks to the audience for their active participation.
Thank you.